Would you believe that many Americans earning over $100,000 a year are broke? That's right, living paycheck to paycheck, drowning in debt, and with zero financial freedom. A high income has become a trap. In this video, you'll find out why this is happening, and more importantly, how you can avoid this fatal mistake in your own financial life. Like, comment, and share. This could change someone's future. The financial reality of high-income Americans. You probably heard the phrase, the more you make, the more you spend. In the U.S., this has become a scary reality. As incomes go up, so do lifestyles, leaving little to no wealth accumulation behind. It's not uncommon to meet people with six-figure salaries and empty bank accounts at the end of the month. Studies show that 60% of people earning over $100,000 a year live paycheck to paycheck. That means more than half of those considered wealthy are just one emergency away from financial disaster. They have no emergency fund, no investments, and maxed out credit cards. Even worse, 1 in 3 people making over $200,000 a year are in serious financial trouble. This includes executives, doctors, engineers, and successful freelancers. A high income often hides how fragile their financial foundation really is. Take this real example. A marketing executive in New York making $220,000 told the Wall Street Journal he's never managed to save more than $1,000. His money goes to luxury housing, private school, and a lifestyle that constantly demands more. This is what we call being rich in debt. Systemic economic issues. Now let's look at the external factors shaping the scenario. Even with good salaries, the U.S. economy presents huge challenges for anyone relying solely on active income. Basic living costs have surged, while wages have grown much more slowly. Inflation has taken a heavy toll. According to the Bureau of Labor Statistics, from 2019 to 2024, the cost of living rose about 20%, while wages grew around 14%. So even people earning more can afford less. The illusion of prosperity fades quickly. The current system benefits those who already have capital, banks, big corporations, and investors. Those who depend on a paycheck end up consuming financial products created by these entities and paying a high price for it. High interest rates, fees, taxes, and easy credit create the perfect trap. To make matters worse, the U.S. tax structure, and many others like it, penalizes workers. While billionaires pay lower capital gains taxes, everyday employees are taxed directly from their paychecks with few deductions. This only increases inequality. Personal responsibility, the individual problem. Yes, the system is unfair, but blaming only the system is like blaming the rain for getting wet when you don't use an umbrella. Change begins with the person in the mirror. Personal responsibility is your most powerful weapon against financial slavery. Many people get stuck in a toxic cycle of earn more to spend more. A bonus becomes a vacation. A promotion becomes a new car. A salary increase turns into a new streaming subscription, fancy dinners, and the latest phone. Meanwhile, their bank balance stays in the red. Here's the hard truth. It doesn't matter how much you make if you can't control your lifestyle. This trap is called lifestyle inflation. It drains every chance you have to build wealth. You keep running faster on a treadmill, getting nowhere. Taking responsibility for your finances is the first real step toward freedom. Don't wait for the government, your boss, or the economy. Decide today that the person who's going to change your life is you. But that decision needs to be followed by action, not just good intentions. The debt cycle and lack of planning. Earning more gives you access to more credit. And that sounds great until it becomes a trap. Banks know high earners are good at paying bills. So they offer big credit limits, easy financing, and tempting pre-approvals. But all of this fuels impulsive spending. Many fall into the illusion that they can spend without consequences. A bigger house brings higher property taxes. A luxury car comes with expensive upkeep. Frequent travel turns into never-ending credit card payments. Before you know it, half your income is going toward debt. Instead of using salary increases to build wealth, people use them to expand their spending. It's a silent cycle. More income equals more credit equals more spending equals more debt. And the more you make, the more you owe. Without a budget, there's no way out. A lack of financial planning isn't just a technical issue. It's an emotional choice. Planning means sacrifice. It means thinking long-term. But above all, it means discipline. And that's the key most people overlook while chasing instant gratification. Financial education and investor mindset. What separates those who stay broke from those who build wealth over time? Financial education. Knowing how to handle money, understand compound interest, and avoid consumer traps. And most importantly, having an investor's mindset, not a consumer's. Schools teach grammar, formulas, and history, but never how to manage money. Why? Because the system doesn't want investors. It wants obedient consumers, people who earn just to spend, and go back to work to earn and spend again. The real shift happens when you start thinking like an investor, when you realize that every dollar spent is a dollar that could be working for you, when you see that true freedom isn't about how much you spend, but how much you save and invest. And yes, you can invest even if you don't earn much. The secret is consistency. It's better to invest $50 a month regularly than to wait until you've saved $5,000 and never start. Small seeds, planted often, grow into great forests. First steps to financial freedom. Want to break out of the cycle? Start simple, but start smart. Step 1. Build an emergency fund. A $2,000 cushion protects you from medical bills, job loss, or surprise expenses that would otherwise push you into credit card debt. Next, pay off high-interest debt. It's a top priority. Credit card interest is outrageous, up to 20% a year or more. Paying that off is one of the best investments you can make. Guaranteed returns instantly. Once the debt is gone, it's time to invest. And this is where many people freeze. They think they need to know everything, have a lot of money, or study for years. Not true. You can start small with weekly contributions and learn as you go. That sequence, save, pay off, invest, is the track to financial freedom. It's a quiet, unglamorous path, but incredibly powerful. It's what separates those who work for money from those who make money work for them. How TOs start investing. Investing might seem complicated at first, but getting started is simple and takes just minutes. Step 1. Open an account with a trusted brokerage like Fidelity, Schwab, Robinhood, or Vanguard. The choice depends on your preferences and the user interface. Then, connect your bank account and set up automatic transfers. Automation is the key to staying consistent. Don't rely on willpower. Set up your investments to run on autopilot. Even if you forget, that's how you build momentum. When choosing what to invest in, go with ETFs, exchange-traded funds. They're safe, low-cost, and perfect for beginners. Some great options include VTI, which covers the entire U.S. stock market. SPY, which tracks the S&P 500. VO, focused on mid-sized companies. Avoid individual stocks in the beginning. That's like trying to fly a plane before learning how to drive. Without proper knowledge, you'll be investing blindly. ETFs offer diversification and lower risk, helping you grow the market safely and steadily. Consistent investing strategy. ABB, always be buying. Want to know the secret of long-term winners? They always buy. The ABB strategy, always be buying, means you invest automatically every month without trying to time the market. Consistency beats cleverness. Many people wait for the perfect time to invest, but the best time is now. When markets dip, you buy at a discount. When they rise, your investments grow. Either way, you win if you keep buying. Investing during crises can be scary, but it's where the biggest gains are made. Those who kept investing in 2008 or 2020 are far ahead of those who panicked. The key isn't timing, it's discipline. ABB is about consistency, not perfection. It's a quiet habit, but a powerful one. Think of investing like paying your utility bill. Automatic, non-negotiable, predictable. That mindset builds real wealth and frees you from financial fear. Criticism of the lack of financial education. Our education system is great at producing employees, but terrible at creating financially free people. You learn to solve complex math problems, but not how to calculate compound interest. You learn about wars, but not how to win the war against debt. This gap isn't accidental. It's a way to keep people dependent. Workers who don't invest Spend more. People without financial freedom accept low wages, bad jobs, and long hours. And all of this keeps the system running. That's why financial education has to be a personal mission. Don't wait for schools or governments to teach you. Read books, watch videos, and follow people who live what they teach. Knowledge is the most powerful weapon you can have. The true shift happens when you turn your paycheck into assets. When part of what you earn works for you every day. That's freedom. That's power. And it all starts with knowledge and action. Earning a high salary doesn't mean you're wealthy. Many high earners are trapped in an invisible cycle of spending, debt, and stress. But you can break free, understand the system, educate yourself, make a plan, and start investing. Remember, the game may be unfair, but playing it better is within your reach. Like, comment, and share this video to help more people achieve financial freedom. And subscribe to the channel. Together, we'll turn mindset into prosperity.